Ira Epstein of Linn Associates with your agriculture wrap-up, and this is for Monday, the 28th of October, 2019 at 1:25 in the afternoon. We're still waiting on the crop conditions report. I don't think it's going to matter that much to these markets just yet. We're in the heart of the harvest. We know that we're getting some cold, damp weather. You always do it this time of the year. The farmers have their way of working through it. They'll see the first daylight, and then they'll have all the tractors in the field again. So we're seeing some pressure come in on the corn market. We're seeing some on the wheat market. Argentina had an election where the current president out of office, and that means they go back to their old ways, which is a boon for U.S. Why? Because they're going to put back on export controls, probably more export taxes. This is just how that's going to be run, and the free market spirit will be out and gone. That could be a little bit of a benefit to the U.S. Big stock market day today, breaking through some new all-time highs. Metals down a little bit on it. Copper up, as we're still seeing in Chile. Lots of problems, lots of unrest in the street. Energy's on the downside. Natural gas up, why not? Cold weather giving that market its first real kick to the upside, and more than welcome. So let's take a look at the weekly area chart of closes. You remain over the 18-week average, which is 887.25. That means to me the market has an upside bias. When I go to a daily bar chart, you can see how the market's peaked out in this 945 area and then started its wave to the downside. In the process, the swing line, which looks, and it's this brown line, it looks at the previous day. And there's 5 rules, and I teach them in my charting course. Do you have an inside day? Do you have a higher high day, a lower low day? Do you have an outside day up, outside day down? Depending on what that is, the market will look at it and draw the line. And what I'm visually looking for is the market is telling me I have a trend. Well, the definition of a downtrend is lower highs and lower lows. If I come back to this chart, it's not as easy to see. I think you'd agree with that. If you take a look, you see that visually. Now, obviously, you might not want to buy into the concept of the swing line. That's up to you, but I watch TV. The analysts I know, and I've been around this 5 decades, they look for higher highs, higher lows, lower highs, lower lows, or the fact that you don't have one either way in the market, just, if you will, oscillating back and forth without a trend. This is in a downtrend unless and until 939 is taken out based on the current chart formation. Add to that the fact that the market's under the 18-day average of closes defines for me bias. My bias rule is ultra simple. When the market closes over the 18-day average, I have an upside bias, which impacts how I view the swing line. It may be down, but with upside bias, the two negate each other. In this case, I have downside bias with the swing line down. 2 of the elements to be bearish. Resistance, the 18-day average of closes, 927.25. In terms of Bollinger Bands, I always look to see where they're at because the trade so often looks to see where they're at for a resistance point or a support point. If this market continues down, I'm looking for 911.25. So the trend is down, the bias is down, resistance 927.25, maybe 911's a support zone, and momentum is measured by the slow stochastic study is pointing down and not oversold. You'd have to have one of these numbers or both under 30 to be oversold. You don't have it. So I still see downside to this market. When I come to the meal market, the first thing I look at is why am I friendly beans in any ways, which I'm not there. Because meal typically leads the parade to the upside. We're not seeing that at this point. It's leading the parade to the downside, which tells me just mentally, oil should be stronger than meal basis to crush spread. I'm looking at lower highs, lower lows, bearish. Unlike the soybeans, I'm already in oversold territory. I've got 2 layers of resistance, 306.60 to 307.80. You'd have to take out 309.50 on the current formation to negate the bearishness. That would not start bullishness, and downside targets 301.40, the lower Bollinger Band. As I said, soybean oil, and you can just see it on the chart, it looks friendlier than the meal market. Downtrend. Here's a market still in an uptrend. You'd have to take out 30.25 to negate the uptrend. Support comes in right now at 30.31, but you do have divergence. You've got the momentum now pointing down. So you have a market that had successfully been running the upside Bollinger Band. It would get over it, back under it, hit it again, and get back under it, and that's the purpose of it. It stayed within the band 95% of the time. The bias is up, but the divergence is now problematic for me. Now I have momentum leading price down, and momentum is often an indicator of where price goes, and it often leads it. Not always, but often leads price. In the corn, lower highs, we've had lower lows. We have spent 4 or 5 days under the 18-day average of closes. Momentum down, not yet oversold. Target 380 and a quarter, resistance 389 and 3/4. By the way, if you were to take out 390 and 3/4, this pattern would break the downtrend. In the wheat market, we peaked out and ran against the upper Bollinger Band. You get over, under. You kept pushing out on it with an embedded reading back here. It's when both the slow stochastic numbers are going sideways over 80. When it was lost, which was right here, and this was October 22nd, it's a sign to me that price and the closest of the 100 or 18-day average want to make a run at each other. This was the market on Wednesday, this is the market Thursday, this is the market Friday, and today's your running day. That's what it implies. That doesn't mean it always works, but that's the implication. It's not the end yet of the uptrend. You'd have to take out 504 and a quarter to do that, and that's about 7.5 cents away from where you're at. This is where the first support comes in. I don't know that the pros are going to buy it because you've still got momentum pointing down. I see a market that's into support, but momentum still leading the market to the downside. Sugar left its downtrend. Now, that doesn't mean it began and it's an uptrend. You have had a pattern of lower highs, even this high, match that one, and lower lows. What I see is turning the market is you had an embedded reading that got itself lost. And let's just make sure it was embedded. It could have been oversold. Both numbers under 20, both under 20, not the day before. Just an oversold condition. And then the market's turning up. Now, if it keeps going, the first resistance in theory to me is the 18-day average of closes from the lower Bollinger Band. You went and got through it. You closed at 1254. If the rally continues, I look for the 1275 to 76 level to be loaded with resistance on the way there. I wouldn't be surprised to see the market chop at the 18-day average, and you're no longer trending. You have a lower low, higher high. Coffee market, uptrend, higher lows, higher highs. You've had that. You've been fighting at the 18-day average, and now today you blasted off again to the upside. Overbought, serious resistance at 101.62 to 101.94. The combination of the 100-day average and the upper Bollinger Band, would not be surprised if the pros took their money off the table up there. In the cocoa market, the market's trying to establish a downtrend, but I don't trust it. Why? Because the broader picture is just sideways. That's all that I see. See a market that's hit its upper Bollinger Bands, can't go anywhere. Tries the lower ones, can't get even down to it, and seems to keep coming back to this 18-day average of closes, just sort of drifting, and the same in momentum. In the cotton market, today's action is bearish. Why? I realize that we see higher lows and higher highs, or do we? What we had was an outside day up yesterday on Friday. When you take out the low of an outside day up, often, I'm not going to use the word always, it wouldn't be accurate, often it is a sign that you've caught a group of traders here and the market goes back to the closest of the key averages, be it the 18 or the 100 on this chart. That's what I'm looking for. Doesn't mean I'm going to be right on it. And this line now has to come all the way back to here. But that's how I would draw it when the market has that happen. So I will take that line tomorrow, not the line, but the arrow, put it here. But I'm looking for that potential. You are in this market overbought, has plenty of technical reason now to give something back. Cattle on feed report kept cattle pretty strong. It was a neutral report, but the report's not as important as after it comes out, you had an embedded reading, it stayed in place. Nothing came out to shake it. So this market, to me, still very much in an uptrend. In the feeder cattle, you shook off an early wave of down and closed about unchanged. You are overbought. Still an uptrend, but overbought. And in the hog market, you know, even with all the talk from China, you don't seem to be able to pick this market up, but you don't add to the downside either. You just sort of are stuck in the market in a downtrend. Two resistance levels, the 18 and the 100-day. Oversold, has hit its downside targets. We'll see if the market can do anything from there. That's going to be the hardest problem for this market. My stock indices report. If by now, if you've been to our website, you know the silver's gone. This only has a few days left on it, and boy, you should take a look at it. I really put a lot of time and effort. I had no idea that you're going to hit all-time highs today, but the market's certainly looking good. It's got the seasonal charts. Now, this is the one on the S&P, and I go back looking at 5, 15, and 30-year studies. I went on this on the quarterly, the monthly, the weekly, and daily charts, trying to give traders with some price count action what I was seeing in the market. It is up on our website. It's yours free to view. Go to www.iraepstein.com. Under research, it's there. It's a video report. So you sit there and you watch the videos. You decide what you like. I am now deciding what my next video report is going to be. I'm going to spend today and tomorrow looking at the charts and try to get one out this week for you, maybe two, so that we get everything rocking and rolling in different markets. With that, I'm Ira Epstein. You have a great day, and I'll see you all tomorrow or in my next videos on the wrap-up on the financials and the metal markets. Take care.